Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Bell and I'm your host Nickey Mirchandani. Well, markets are likely to start on a flattish note given that SGX Nifty futures indicate a flat opening for the broader index in India. US stock markets ended an indecision session with some amount of marginal gains. A spate of economic data have appeared to support the Federal Reserve Chairman, rather a reassertion coming in on account of the rate hikes which we are now expecting. Asian stocks, they have eked out gains after choppy US session. Bank of Japan kicks off its two-day monetary policy meeting today. And in terms of FII and DII data, while foreign institutional investors, they've bought in shares worth around 3,671 odd crore, and DIIs too have been on the buying side with an amount which is less than 950 odd crore. But with this, let us get going and discuss some stocks and strategies today with Chandan Taparia, the head technical and derivative research at Motilal Oswal. Chandan, good morning. I'm going to start off by asking you about the support that came in yesterday from Bank Nifty to Nifty in the first half. We saw some amount of course, the Nifty started on a negative note, but significant amount of recovery came in. How do you view the Nifty index right now, and what are the immediate RSI levels?
Good morning. So yesterday we opened negative in line with the global weakness, but the good part is that we managed to hold the key support zone. Yesterday Nifty made low near to 17,600 or 17,635, and good spurt was seen in last 1 hour. So that clearly indicates that dips are being bought and we are likely to see positive to range bound bias in the market. So we believe that 17,635 could act as a support. Buy on decline could continue, and index has potential to head towards 17,850 to 17,950 level. You talked about Bank Nifty, that also supported well to the Nifty index. So here we have support near to 41,250, and with the support, Bank Nifty can attempt to budget high of 42,000 in next 1-2 days.
Right, that's some real bullish call coming in on that one. Clearly some more upside from what Chandan seems to be suggesting. But Chandan, I'm also going to be asking you about the three profitable ideas right now for viewers. Any counters that we can be looking at which are nearing their breakout levels for that matter, or have formed a very bullish approach on the candlestick approach, whichever method that you're looking at?
Yeah, so first I'll talk about capital goods name, Cummins. So Cummins has formed a rounding bottom. On weekly chart, it has given a breakout from pole and flick pattern. A strong price pattern with volumes and open interest clearly indicates momentum could continue. So here we'll buy with support of 1645, and stock has potential to rally to us 1750. Apart from this, Indian Hotel is one of the strongest setup we are observing. It is giving a consolidation breakout of last 25-30 trading session, making high rise, high lows. So 319 is the support. Stock can head towards 345 to 350 level. So Cummins is one, Indian Hotel is second, and apart from that, we can also focus on selective PSU name including SBI, which witnessed the good support near to 50 exponential moving average. So SBI has support near to 550 for upside swing towards 585.
Chandan, it's also weekly expiry, right? Any strategies that the viewers can now adopt looking at that? And also, what is the trade setup now looking like? What can be the approach overall that can be adopted in markets like this?
Yeah, so there are two ways of dealing in this market. First, either you buy the call option on decline or initiate the bull call spread. So those who are looking for bull call spread, we suggest to buy 17,700 call and sell 17,800 call. Initiate this spread at cost of 30-35 points. Second, those who are looking for naked trading options will go for buying of 17,650 call. I'll go with slightly in the money option. So 17,650 call yesterday closed at 108 rupees. Wait for a small dip to buy this near to 75.80 for target near to 150 levels.
All right, Chandan, then we'll quickly address the top movers of the day and get back to you on stocks that look attractive on the chart based on the news that we're just addressing right now. Well, in bunch of stocks that we'll be addressing this morning, of course, Adani Group of companies, Kirloskar Oil Engines, that's going to be an interesting one, and metal counters overall. Sequence Scientifics too will be in our list right now? Well, in terms of Adani Group of stocks, NSE has again placed in Adani Enterprises under the short-term ASM framework from March 9th. It only came out of that framework on March 8th. Now, ASM stands for Additional Surveillance Measures. It is also placed in NSE has also placed in Adani Power and Adani Wilmar, apart from Adani Enterprises under the ASM framework stage 1. So clearly, those are some of the counters that we need to keep an eye out on. Separately, there have been pledges which has been created now. Adani Transmission, their promoters have pledged, equity to an extent of 0.76% in the favor of SBI Cap Trustee Company. With this, its pledged shares overall in the favor of SBI Cap stand to an extent of around 1.32%. And also, if you talk about Adani Green Energy, promoters have pledged in stake to an extent of 0.9%. Again, that is also in the favor of SBI Cap Trustee Company. With this, the total pledged shares in the favor of SBI Cap now stand to an amount of 2%. Another one that we're going to be talking in detail about will be Kirloskar Oil Engines, where 3 promoters have finally offloaded around 17.7% stake in the company, and 10 investors actually have picked up a total of around 14% stake. To be precise, 13.65% stake for a consideration of around 636 crores. This has happened through, of course, an open market transaction at an average price of around 322 odd per share, which is at a significant discount, as you can see on the charts right now. 10 investors, these investors which have basically picked up 13% stake include the likes of Franklin. It also includes the likes of HSBC and Nomura, amongst others. The good part about this is there was a lot of overhang with the promoters selling their stake in the company. Finally, that has come through. But the bad news is that the stock has already trebled in the last couple of months, So we are seeing significant up move coming in on this one already when it comes to the stock price, run up out there. So Sequence Scientific, that's another one in our list today, where the company has terminated an agreement to acquire around 100% stake in Tanata Pharma. Of course, this was announced in November 22. So a bit of negative coming in on that one because the said transaction has not been materialized. Also, we'll be keeping a close eye now on metal counters. There have been slew of brokerages which have suggested now. Yesterday, we spoke about Kotak Institutional Equities suggesting a buy on metal counters, and today we have Jefferies coming in and saying that at this point of time, there is a buying opportunity which is coming in from the metal space overall. And the Indian metal stocks right now, they've been underperforming most of the global peers as on a calendar year to date basis. So CYTTD is where the underperformance is coming in, at least in terms of the stock prices as compared to the global peers. And at that point of time, it also suggests that the Asian steel spreads are still 10% below the long-term averages. So there is a scope for further expansion coming in on this one. But we are going to be on the sidelines to address the markets opening just to see how the weekly expiry day is turning out for all of us in that case. Somewhat positive cues, almost flattish cues coming in for SGX Nifty. Economic data also seems to be weighing on the sentiment right now for the market. So it remains to be seen if we can manage to have a positive opening coming in for markets right now. So that's clearly one thing that we'll be keeping a close eye on. Of course, Adani Group of companies again will be continued to be on, we'll put the spotlight there also because there is billions flowing through Mauritius entity coming in after there is this whole Hindenburg research which was being put out. But let's address the market opening. Nifty 50, we are looking at slender gains coming in. Okay, not even slender for that matter. A flattish sort of day coming in for Nifty, at least when it comes to the opening per se. 17,750 levels have been held on to, and we are trading above that mark clearly. Let's look at the Bank Nifty index to see if there is some amount of support which is coming in on the Bank Nifty index per se. A flattish opening coming in even on that one. We saw some amount of support coming in from Bank Nifty yesterday in the second half of the trade, which led to a sharp recovery in the markets. Remains to be seen if the trend plays out in today's session too. In terms of the sectoral indexes that we have, broader index for that matter, we're looking at some amount of gains, 0.3% coming in for mid-cap index. But if you talk about the small-cap index, that's where 0.4% gain coming in. So some amount of performance coming through broader index, but clearly the trend is flattish right now overall for Nifty and Bank Nifty. Nifty Metal Index, we were talking about it in great detail just before the opening bell, right? 1.2% uptick coming in on Metal Index. IT Index seems to be somewhat trading, has opened with a somewhat negative bias. Flattish trend playing out there on that one. And Auto Index, 0.1% of gain coming in on for auto. So clearly we're seeing some amount of traction coming in from Pharma Index, 0.2% gains on Pharma Index for that matter. So clearly the trend at this point of time isn't really indicating as a positive start coming in, and we are looking the defensive, something like an IT, something like an FMCG hasn't really also contributing much towards the momentum of the markets right now. In terms of the Nifty Realty Index, we're looking at some amount of upticks there, but overall 17,750 mark. Now that has also been taken off. We need to be clearly, on the sidelines, given that there is a slew of macroeconomic data which is playing out. And also, if you could look at the top gainers and the top losers just before I address the market breadth, 34 advances versus 14 declines. Well, in terms of the top gainers that we had there, Hindalco, Tata Steel, JSW Steel, right? Just we indicated that metal could state some amount of recovery. Top gainers out there, Bharti Airtel, Divi's Lab also seem to be out supporting the uptrend right now, but at least when it comes to the metal basket per se, the mood remains pretty much flat. It's nothing sort of an opening right now, but needs to be seen as a weekly expiry, right? Adani Enterprises, Reliance and TCS. Well, these are the top losers that we have on our list right now. ICICI Bank, Bajaj Finserv and M&M2 are on the top losing side of the Nifty index. But Chandan, quickly come in. RIL seems to be it's not supporting in. Bank Nifty, there is no support coming in. Do you think any of the trend reversal coming in, because it's a weekly expiry day, any of the trends to play out otherwise?
Yeah, so like after the opening market going range bound, the good part is that after the yesterday recovery, there is no major cut, but the concern is it is not surpassing a key level of 17,777. It just made high near to 17,772. So either let it surpass 17,772, then only some spike of 50-60 points could be there. And again, if it comes down to 17,700, then also support could be there. So there are two scenarios. Either we buy near to 17,700 with support of 17,635, or we'll go and buy on hold of 17,777. Now looking at stock wise, you talked about Reliance and ITC. I think ITC is holding well. Selective power stocks are doing well. When I talk about Reliance Industry, it got stuck in a broader range between 2,300 to 2,450 level. So let it come and cool down to 2,350. Then we can go for buy on decline stance in the Reliance Industry.
Chandan, also your strategy on metal stocks right now, because we're seeing today some amount of momentum coming in from Tata Steel, JSW Steel, Hindalco. What do you make out of it, and the charts of which of the three counters, according to you, look a little bit attractive given the risk-reward ratio?
So risk-reward ratio is better, but performance was not seen in metal. But now I think the developments which are happening can take the metal stocks on higher side. Most of the metal stocks are showing same kind of behavior, but I'll focus more on the Jindal Steel, given its price behavior and resilience at the time of market decline. So can look for buy on a small dip with support of 570. Stock can once move to a 615.
All right, Chandan, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, it's that time of the show where we address the fundamental side of the story. Of course, we have so much to talk about the metal stocks, hotel stocks for that matter. But with that, let's bring in our funda guest, Avinash Gorakssakar, who is the Director Research at Profitmart Securities. Good morning, Avinash. All right, we've almost seen, after 4 years of normal monsoons that have come in, there is a possibility, and there has been reports hinting at the possibility of El Nino for that matter in 2023. Do you see a strong correlation between El Nino and the consumer story right now, with HUL being a strong proxy?
See, I think clearly, these are just initial reports. I think we've yet not got any confirmation that El Nino will definitely occur this time. And if at all it happens, Nikki, I think, the damage is going to be quite limited considering the fact that most of the agri areas are well irrigated. Coming on the consumer pack, I think companies like Hindustan Lever or for that reason, other larger players in the segment, they would definitely find definitely volume growth to be more challenging. In fact, in the third quarter, we saw most of the FMCG companies, recording mid-teens, volume growth and margins under pressure. My sense is that, raw material prices, especially commodity-based kind of inputs have started falling. So hopefully, that should give some breather in the fourth quarter. But if at all El Nino happens, then I think it's going to be a little difficult for companies which operate largely in the rural markets, especially, larger companies like Lever, and that would definitely spiral some sort of further downside. So I think probably we'll have to wait for a couple of months more. Once the final report is out by month of May, I think that would give a better assessment. But yes, in the near term, the stock would struggle because definitely this is not a good sign. And if it happens, then volume growth in the coming financial year is obviously going to be impacted quite severely.
Sure. Let's also talk about hotel stocks overall, right? We've seen significant amount of traction building in, and Chandan was talking about clearly Indian hotels before we could try and get into the conversation, but a little bit more on the fundamental side. Holiday season is in. We're seeing the airlines getting full. Do you expect some amount of traction building in for hotel stocks? Because even the commentary from Lemon Tree and Indian Hotels thus far has been upbeat. What do you make out of this space, and which are your topics within this space?
No, I think, Nikki, as far as the hotel stocks are concerned, I think one clear aspect is there's been a big supply crunch of the available rooms. And I think average room rentals in the month of January itself were up by almost 15%. And I think, if you look at the COVID levels and the levels which are prevalent now, I think it is very clear that most of the company managements are extremely upbeat that February and March obviously are also going to be very strong months. Obviously, from April onwards, how average room rentals pick up is another thing. But looking at the kind of corporate events which are happening both on the corporate side plus domestic traveling going up, I think that is definitely going to help the domestic hotel sector grow quite significantly. In fact, we have got some sporting events in the month of November 23, the ODI Men's World Cup happening. So, that is also another event which would obviously, give a color to the, tourism sector. My sense is that, companies like Indian Hotels, Lemon Tree, Chalet Hotels, these are all positional bets which, if investors take a 12 to 15-month horizon, rather than looking at price earning multiples, Nikki, I think one should look at the EV to EBITDA multiples. And there, I think Indian Hotel definitely stands a good chance. They have managed to scale down debt, significantly. And I think looking at their geographical, reach and the kind of offerings they have, I think Indian Hotels, Lemon Tree, Chalet could be good bets provided the investors have a slightly longer time frame.
Sure, you spoke about the debt coming down significantly for Indian hotels, but talk about the valuations in terms of EV to EBITDA. How does that stack up as compared to the peers, and also as compared to its own long-term average for that matter?
No, I think, see, clearly on historical numbers, the EV to EBITDA also looks a pretty well stretched. But if you're looking at FY25 and FY26 numbers, I would believe that a company like Indian Hotels could easily get a EV to EBITDA multiple of at least 20 to 25 times, considering the kind of the positioning of their business, the longevity of their earnings growth. And I think the hotel sector has now come at a situation where I believe that what was the situation in 2000 2008, the cycle has turned extremely positive, Nikki. So I think clearly EV to EBITDA multiples would be a function of what kind of room capacity they add, what kind of earnings trajectory they record. But overall, I think on any decline, Indian Hotels could be a good positional portfolio kind of pick because business is coming very strongly. And unlike in the COVID days when things were extremely bad, I think now people are moving out quite freely. Domestic tourism is picking up. So all these factors point out that there is going to be a strong moat which the company will enjoy at least for the next couple of years.
Sure, clearly. Okay, so that's the word coming in for Indian hotels and overall the hotel space. But let's talk more about metal counters right now, because we've seen significant amount of traction first building in. There was this whole narrative coming in with the China reopening, right? Where there was a lot of rosy picture painted out that probably this would lead to demand coming up in a big way. But we did not see that amount of performance coming through, at least in the stock prices of the companies. Fundamentals seems to be gradually catching up, but what do you make out of it right now? Because today we also had Jefferies coming up and suggesting a buy report on metal space overall.
Yeah, I think Nicky, my guess is you are right in saying that a lot was expected from the China, factor, especially with China likely to enter the metal market, but that has not happened. And I think until that happens, we may not see a significant rise in global metal prices. My sense is, just like the third quarter when we saw most of these companies reporting negative numbers, negative performances. I would believe even the Jan to March quarter is not going to be great. I think we've been talking to several metal companies where domestic demand has picked up. I think domestic demand is now going to be a very important variable for metal companies, but pricing is going to be very crucially dependent on what happens on the global front. And to that extent, I would believe that maybe some buying could happen, or maybe some traction in the metal sector could be more visible from June, July onwards, when hopefully China enters the metal market and we could see improvement in global metal prices. But till that time, this is going to be a market performer kind of sector. And within that, I think companies like say Tata Steel, Hindalco, Jindal Stainless. These are interesting names which I think have more or less bottomed out. Jindal Stainless, in fact, should do pretty well because they operate in a very niche space and where prices are far better than the normal commodity range of steel prices.
Jindal Stainless, well, that's the word coming in on that one. But Avinash, what do you make out of overall now Adani Group of companies? We've seen marquee investors pretty much checking into the counter right now. GQG name coming in on that one. And of course, today we saw NSE surveillance system, again, NSE putting Adani Enterprises along with the two other group companies under the ASM framework just when it came out yesterday, at least the flagship firm. What do you make out of it? Do you still think that something like Adani Ports could be a fundamentally good bet? How do you look at the whole group of stocks, and which is your pick within this space?
Yeah, I think clearly this ASM move is definitely going to spoil market sentiment in the very near term. But I think, considering the fact that most of the damage is now factored into the prices, I would still believe that, companies like Adani Ports, Ambuja Cements, ACC, these are companies, Nicky, which offer a lot of value if one were to look at the longer term positioning of these companies. Adani Transmission and Adani Total Green, Adani Total Gas, we still feel look expensive on valuations. And I think to that extent, they would obviously not, see a big re-rating at least in the near term. But yes, if somebody were to look at the next couple of years, I think Adani Ports has a very strong cash generating kind of business model, has a very strong monopolistic hold in this space. And obviously, as infrastructure sector grows, the port sector is definitely going to see a lot of growth. So I think Adani Ports could be a good bet. But I think overall the Adani pack is going to see a lot of challenge. There are many companies where still stocks are pledged with lenders. And most importantly, unless we see at least 1 or 2 quarters of good significant earnings growth from these companies, I think the markets are not going to re-rate these companies in a hurry. So I think it's going to take a time, maybe the next couple of quarters, hopefully growth comes back. And I think the markets would then be more confident on betting on these companies.
Sure. Avinash, you spoke about ACC and Ambuja also being one of the preferred bets within the space. But how do you look at overall the cement basket? Something like a Shree Cement, something like a Dalmia Bharat, the top leading players right there. You think Adani can potentially lead to a delayed expansion plan, which in turn could benefit the cement sector? And the ability to hike prices, especially in the strong quarter, can probably lead to uptick for these counters here on?
Yeah, I think my guess is, in the very near term, these companies would benefit. In fact, Shree Cements, Dalmia Bharat, or for that reason, even larger players in South like Ramco Cements, smaller players like Heidelberg Cement. We are positive on these companies also. But I think clearly, going forward, what has happened is that cement is now considered to be the big bright spot in the infrastructure space. The government has announced a very big package for infrastructure in the current year's budget. And I think the first building block for infrastructure is cement. So volume growth is going to kick in quite solidly. I think recently cement companies took a 10 to 15 rupees cement price hike also. So that is also going to add to margins, and plus, input prices have started easing off. So I think all these things are going to benefit, all across the sector. But yes, if you were to ask me, if the Adani Group goes slightly slow on their expansion, then it gives some kind of, benefit for the existing players because prices would be maintained. And to that extent, they would benefit in the near term. But longer term, I think despite rise in cement capacities, I think the consumption is also going to grow in good double-digit growth. So to that extent, we are positive. We believe that over the next, say, 12 to 15 months, we could see a strong outperformance in the sector, especially from the larger players, which have got a good geographical pan-India network.
So sure, you're talking about something like an Ultratech, ACC, Ambuja, and Shree Cement for that matter, the top leading players, at least when it comes to the geography, right?
Yeah, exactly. I think because see, pan India, you need to have a good geographical reach because freight costs are very important. And most importantly, most of these companies are operating at 70 to 80% utilization levels. So to that extent, this is a high fixed cost industry, which helps them, cover up their costs. And hopefully the cement price trends, if they remain remunerative, that would add to the bottom lines.
All right, Avinash, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.